You've seen the ads, luxury cars, private jets, and the promise of making thousands from your phone while sitting on a beach. But here's what they don't tell you. 90% of new traders lose 90% of their money within the first 90 days. Today we're pulling back the curtain on the Forex market to show you what's really happening behind the polished advertisements. Welcome to Solvanta Media. I'm going to walk you through the structural, psychological, and statistical hurdles that nobody tells beginners about. Let's start with the sobering truth. Regulatory data shows that up to 89% of retail trading accounts are consistently in the red. Profitability isn't about luck. Consistent success is reserved for the top 1 to 3% of participants. To get there, you have to understand the ecosystem you're actually playing in. Most beginners assume their broker is a neutral partner. But in Forex, how your broker makes money can be your biggest disadvantage. There are two main models. The B-book model is the retail standard. Here, the broker is the market maker. When you lose, they profit. This is the internalized model. This creates an inherent conflict of interest that many beginners ignore until it is too late. A-book brokers, on the other hand, pass your trades directly to massive banks. They make money on commissions, so their interests actually align with yours. For a beginner, finding an A-book or a well-regulated broker is often the first step toward survival. But even then, there are hidden costs. You'll often hear zero commission, but trading is never free. The spread is the difference between the buy and sell price. In major pairs, it might look small, but for overtraders, these costs can quietly erode 20% of potential profits every year. Then there's slippage. During high volatility, your trade might execute at a worse price than you intended, putting you in a loss before you've even started. And don't forget swap rates, interest fees charged for holding positions overnight. For swing traders, these can be a silent profit killer over time. Now, let's talk about the main attraction for many beginners. Leverage. Brokers offer ratios as high as 500 to 1, letting you control massive positions. It sounds like a shortcut to wealth, but leverage is a double-edged sword. It magnifies gains, but it magnifies losses just as fast. In fact, with extreme leverage, a tiny 0.2% move against you can wipe out your entire account balance instantly. Professional traders rarely use more than 10 to 1 effective leverage. High retail leverage is designed to trigger margin calls, which directly profit B-book brokers. The biggest secret of all, Forex is only 20% strategy. The other 80% is purely psychological. The market is built to exploit your natural human biases. Take loss aversion. Beginners tend to hold on to losing trades hoping for a turnaround while closing winners early. This is a recipe for long-term ruin. Then there's revenge trading, trying to win back a loss immediately. This leads to impulsive, high-risk bets that almost always end in a blown account. Remember, you aren't trading in a vacuum. Retail traders make up only about 5.5% of the market. You are competing against central banks and hedge funds. These institutional players use algorithms and massive capital. You cannot move the market. You can only learn to follow the footprints they leave behind. A recent trend is prop firms, companies that give you capital if you pass a challenge. While it reduces risk, the failure rate for these challenges is over 95%. And be wary of AI trading bots. Most are sold as easy solutions, but they often fail when market conditions shift. There's no substitute for your own education. So, how do you survive? It starts with risk management. Never risk more than 1% of your account on a single trade. Protecting your capital is job number 1. If you can't protect your money, you will never be in a position to grow it. Success in Forex is a marathon. It's about patience, managing your emotions, and treating this like a highly competitive profession, because it is. Forex isn't a get-rich-quick scheme. It's the hardest way to make easy money. But for those who master the psychology and the math, the rewards are real. If you found this insight helpful, hit that subscribe button for more deep dives into finance. We're here to help you navigate the noise. Thanks for watching Solvanta Media. Stay disciplined out there, hustlers. We'll see you in the next one.